Hello everybody, it's me the Boss Hog, and before we get to my stock portfolio as at the end of October, by popular request I'm going to introduce the inspiration for the name behind this channel. So this here is my pet hedgehog called Euclid. We've just woken him up, it's about 8:30 on a Saturday, so he's still a little bit groggy, but yeah, I thought, so this is the inspiration for Boss Hog. I'm slightly obsessed with hedgehogs. We've got like hedgehog doormats, salt and pepper shakers, all those other good things. So he's about 4 years old now, properly domesticated, and mostly a sweet little guy. So yeah, this is Euclid, everybody. So say hello. And he's a bit of a wiggle. He's a bit of a wiggle at the moment, but you can see he's in pretty good spirits. So yeah. All right, excellent. So this is Euclid for those who have asked, and there's been a few of you. And now back onto the portfolio. Let's do it. Alright, so I guess the yellow highlight first of all. So in terms of my profit for this month, it actually looks pretty solid, right? 2.7k, definitely no joke. On a 98k portfolio, that feels pretty great. However, the kind of a disappointing month in a number of ways. First of all, I felt like I was constantly going uphill, just because the FX this month was unhelpful. I also outperformed both the S&P 500 and the FTSE 350. And I also felt like I made a couple of suboptimal trades, to be honest with you. So although I'm trying to like not beat myself up too much, it's sort of like just feels a little bit like meh, like maybe I could have done a little bit better in places and so on. So again, I'm trying not to be too grumpy about it because it's still like the better part of £3 grand, and that's pretty serious money. But there it is. In terms of my profit since I started here, you can see I've made £13,239. Of which £2,000 give or take is dividends, and the rest has been capital growth. So that's sort of interesting for me as a new as a new investor to see that. I sort of expected more like 5 and 4, 5 and 3%, something like that. So in terms of percentage splits, I was expecting it to be more like 60% growth and 40% dividends. So I suppose it's not what I was expecting, but again, I'm definitely not going to complain about making more money than I had expected to make from capital growth, so that feels pretty good. And in terms of sort of reconciling that back to my brokerage, so trading 212, the middle left table there, that's kind of taken straight from them. It basically is my month-end reconciliation to make sure everything tallies up. And I think it's also very interesting for me on reflection to look up the profit between realized and unrealized. I've been pretty active trading. You can see there as well in the top table, lots of buys and sells by month. So yeah, quite a more active trader than I was expecting, rather than just an investor. So it's interesting for me to see that breakdown as well. Because yeah, unrealized at the moment, less than £1,000 profit, but made more in the past. And another reason why I guess I was a little bit disappointed is because during the month I had been up like 3.5k, and like my portfolio was £1,000 higher almost. So I actually wondered at one stage if I was going to hit the 6 figures this month, but it wasn't to be. So I guess that's it. Like, I'm trying not to be too disappointed, and I think maybe part of it's just vanity. So again, I try not to get too worked up about it. And yeah, so I guess overall it's a pretty decent month. Just I feel like it could have been better due to various things that we'll talk about in a little bit more detail now. So that's where we currently stand as of the end of October. So yeah, so at the end of September, I was actually ahead of the S&P 500 in terms of the benchmarking, and miles ahead of what was then the FTSE All-Share. First of all, I decided to change the measure of my FTSE index from the FTSE All-Share to the FTSE 350. The main reason for that is because they more or less are the same thing, except from the FTSE 350, I was able to use my portfolio, my Google document portfolio, to automatically keep a track of the FTSE 350 price, and for whatever reason, the FTSE All-Share lookup in Google Documents doesn't work. So I was having to do it all manually, which was a pain in the ass. So I've just simplified it with the FTSE 350 here, and I've backdated all of it as well to give a better idea of where we currently are. But the S&P had a really strong rebound in October, and I basically just couldn't keep up with it. Like the Teslas of the world just were on fire. Obviously some great results from the likes of Microsoft as well, and I just couldn't keep up. I would say that my portfolio is designed, I guess, to be fairly well balanced, which tends to mean that I underperform the market when it's on fire and overperform it when it's falling apart. That's certainly what happened in September, and I've actually only had one negative month this year. I think the S&P's had 2 and the FTSE's had 3. And even then my one negative month was like minus 0.5%. So I guess in the short term I'm actually kind of okay underperforming, but again it was one of these things that kind of just added to my my feeling like, oh, it could have been a little bit better, because yeah, the S&P there gradually just pulled away from me, which was a little bit disappointing. And actually quite rarely I underperformed the FTSE 350 as well. I do put that down to the fact that I was quite active in what I would view as underappreciated value shares. I bought £12,000 worth of National Express shares, which is a UK listed coach company. They are my biggest holding in my portfolio at the moment. And I just cannot believe how cheap, or for me at least, I believe that stock is very cheap, so I've been loading up on it. Then we've got Bristol Myers here as well. For whatever reason, the market seemed to hate their results, so I added even more to what was already a fairly large holding. And likewise, even Games Workshop, which I think is a real quality company, it had like a weird investment bank note about, you know, a modest downgrade only to like 125 as a target. It's currently trading about 97, but it just took the wind out of it basically, which was a bit of a surprise to me. And to be honest with you, I think it's quite a buying opportunity at the moment for Games Workshop. And then also Lockheed Martin here again. I had just been buying this from dividends, but I decided to add some capital to it following the drop from, I think, actually quite disappointing results all round. Other material buys I had was Amazon, Hollywood Bowl, which is a UK listed bowling company, believe it or not. And again here, I think Hollywood Bowl, they released a trading statement that kind of didn't really move the market, but I think it was positive enough, especially when you read between the lines. And I'm looking forward to their December full year update when, again, I think we'll start to see them bounce back. It was previously a very well-run business, although it hadn't been listed for very long. And last but not least, here is my telco play, which is Gamma Communications, a UK listed company that most people even in the UK wouldn't have heard of, but I think it's a top quality company, and I was probably a little bit impatient buying, but since then I've just been averaging down and buying shares at, like, you know, what I believe are a good 15% undervalued from even where I was prepared to enter, and then, you know, I think they're a good 35% undervalued compared to where I think they should be. I would say, especially with Gamma, I'm on the more optimistic side of analyst estimates, but still, I think I know the telecoms industry pretty well working in it, and I mean, I've worked with Gamma in the past as well, so again, I have no problem putting my money where my mouth is. So again, all that aside, I think, like, the good news is profits moving in the right direction. The bad news is I did underperform both the S&P 500 and the FTSE 350, but actually I felt like a lot of the buys I got were pretty good and good value for money. So I think actually overall I'm kind of, and this has been quite cathartic, even this like first 10 minutes, actually quite happy with what I did during the month, even if I didn't time everything perfect, although that's hard to do, of course. And you know, even if a few things just didn't go in my favor, maybe that's it. And I made some mistakes probably as well. So that I guess is a summary. But let's start to have a look at a bit more of the details to go from there. All right, so in terms of performance by sector, not huge movement, but actually, you know, my oil and gas, this is the lowest it's been probably since I started, and this is mainly because I sold out of Evraz, which is my main iron ore play. You know, I think it held up relatively well compared to some of the other iron ore plays like Vale or Rio Tinto. But actually, there's some reasons for that in terms of geopolitics and where the mines are located and staffing and COVID and all those other things compared to Rio and Vale. So I just decided to profit take, especially because their next dividend is many months off. And again, buy National Express. Technology also drifted lower. That's mainly just because I'm not really adding anything to technology and probably won't be until after Christmas. My plan here is to basically buy more tech after Christmas. I just don't really have money or to put into the right part of my portfolio until then. And then really I've just been targeting kind of healthcare with Bristol Myers and transportation with National Express. And even my consumer discretionary got a bit of love. I mean, not too long ago this was at like 20% of my portfolio, and it's gradually drifted down. But with Games Workshop and Hollywood Bowl both being in that category, it's seen a bit more attention. Now, in fairness, I'm mostly happy with my portfolio size. You know, 25 companies I can actually take part in earnings calls and actually kind of very closely follow companies. I have enough time to do 25. The one thing I would say is I think there's a few things where I just don't feel like I have enough diversity. So, for example, I don't have a consumer non-discretionary. That's mainly because I just can't decide which one I like. I really like Procter and Gamble, and I also quite like Reckitt's, but they're both a bit pricey for me to buy. And I'm very bearish actually on Unilever. Like, I don't really want to own Unilever for the long term. And then I know you've got like your Pepsis or you know, etc. But none of them really excite me or get me. I know that that's not really the job of consumer non-discretionary, right? But it's just not really, nothing's resonating at the moment. ETFs I've flirted with in the past, but I've got away from. REITs, again, most of the REITs are just fair value, and I've realised over my nearly year of investing now that I just love a good bargain, and I struggle to find any with REITs, to be honest with you. I think, you know, it's a very simple business model, and most of the REITs are very fairly priced, if not overpriced. So again, although I'm looking for a bit more diversity in a few areas, I just haven't been able to find it. With construction, to be honest, I probably missed the boat a little bit. There were some good opportunities in UK construction. I flirted with a company called Redrow, but never really committed to it. Just, you know, like did a little bit of trading it apparently for the better part of 70 quid. I think there are some tweaks I'd make to this, especially once my holdings, hopefully in things like National Express and BMY, come good. I might do a little bit of kind of profit taking and rebalancing my portfolio and maybe target some of these that are missing, but I'm in no rush for that, to be honest with you. So that's the only thing I would say from this, looking at it. Generally speaking, I think I have a plan moving forward for both tech, maybe also oil, gas and mining. I still like it as a play, and you know, the gaps effectively in my portfolio as well. So that's going to be the plan moving forward. All right, so one of my favorite slides is dividend received, and actually October became my new best month to date, excluding the special that I got in March, which was notable. I would say that wasn't originally the plan. Like, if you look at when my holdings pay, a lot of them actually paid in September, but you know, my brokerage is free, it's newish, it's trading 212, and it's not super duper quick in terms of dividend payments. So, you know, although I got a lot of them on sort of the 29th, 30th, etc. of September, they only reached my account in October, and so that's when I counted them from, right? I don't count when I get paid, I count when they crystallize in my account, basically, and when, you know, I get a little transaction that ends up being put into my portfolio. So that's how that works. So yeah, of the £307 in dividends this month, 190 are actually from September. So that was Polly, Huntsman, and Vistra there as well. So yeah, together that was like 190. So that's interesting to note. Obviously, as I've like consolidated my holdings, and depending on how long you've watched my videos for, when I first started, I had like 75 holdings. Now I've got 25. So, you know, a significant consolidation. What has tended to happen is that I've been getting fewer dividends, but obviously they're for larger amounts. Pretty intuitive, really. And this is kind of similar. Like, if you look here on the table on the right, you'll see a lot of things like CEY there is sentiment. That's a gold play, but I decided I preferred Poly. Vistra was a kind of value play, just because I thought the market overreacted, and you know, I've got other utilities. Huntington I actually do like. I've been kind of moving it around in my portfolio. It was up as high as 600. I sold off the last 100 at sort of 1640, I think it was, during the last month. But I would actually quite like to get back into Huntington. I'm watching it because, to me, anything under 1550 is a good re-entry. So again, I've kept one share here just because I find it easier to monitor that way. Hewlett Packard, my wife has like one share in my portfolio just to kind of give some tribute to Peter Lynch. So she had Hewlett Packard, now she's got a restaurant company in the UK, and then just MPW here. This was like the tail end of a REIT that I had from previously, so that's why. And then the companies here on the whole that I've decided to keep, you know, I've been adding to, basically. So Poly is my gold hedge, so I want to keep 5% of my portfolio in Poly. Huntsman, I have been profit taking. It was as high as 700, and I've basically been trimming. I think I got a fairly good exit for these last hundreds, 130 at kind of 32.40, so pretty happy with that. But I would consider getting back into Huntsman. You know, if it went back down to like 25, is good value. As it is, though, I'm planning on keeping my 500 shares as a minimum, because I think it's my industrial play for the future. Aviva here, I think they're a much improving insurance company in the UK, and Gamma we've already touched on, right? I've been averaging down on them as well. So yeah, the dividends are coming in. I also hit a milestone this month in terms of my dividends to date being £2,000. So again, that felt pretty good as well. Oh, and the only thing to add, and I was almost surprised by this actually, I had to double check. But my blended portfolio yield currently sits at 4.27%. The reason why I was a little bit surprised by this is because I sold off Everaz, but then I also realised that I'd been buying shares in a few other things as well, like BMY for example, that kind of supported that moving up actually, as well as some financials. So that was a little bit of a surprise to me. Again, I kind of am happy around the 4% level, I suppose, especially because I do have things like EPD for pipelines and yeah, Pharma and even Huntsman yields pretty well, to be honest with you. So that's my blended yield at the moment across all of my portfolio. All right, so this is now my full portfolio. I'm actually able to put it onto a single table on the left. So this is all of my active positions. In terms of just a reminder or method for anyone who's not aware, the worth rebased is what it's the pound value as of the last day of the month, so Friday in this case. And then the PNL is a combination of both unrealized and realized. So, if you look at the bottom there, you'll see Everaz, right? I've got like one share in Everaz remaining, but I've owned and sold this company like 3 different times. And so over those sales, I've profited £685. Similar things with like Huntington, Genius, etc., etc. So that's why I'll have very small holdings in those. But I've kept one share typically, or a very small amount of shares, just to keep an eye on it. And because I believe that there's a good possibility I'm going to want to buy them again, so that's why they remain. In terms of everything else, I mean, there are a couple of very large res figures here, right? But they are weighted toward the top, which is kind of interesting. And again, I'm trying not to worry about that. And in fact, I'm not worried about it at all. I'm kind of relaxed and sanguine. Because a very similar thing happened with Huntsman, right? Like it crashed like $24.50, and I just couldn't get it. Like I was sitting on a pretty hefty like 4-figure loss for a little while, and then an activist investor came along. The market kind of realized it was undergoing a good transformation, and now it's like by far my largest profitable position, right? Almost approaching 4,000, so that feels pretty good. So again, for me, I'm pretty confident in National Express. I think it's 50% undervalued. I'm not entirely sure how undervalued BMY is, but maybe something like 30% feels fine. And Gamma likewise, well, I think is like 30% undervalued. So maybe in terms of like, I could have been a bit more patient building stakes in these companies, so I was sitting on less red ink in them. But I think all of my entries, my averages into these companies feel really good at the moment. And now I'm just sitting on them and hoping that happens. There's also some good profit that I've made here, like trading Apple, Microsoft. Who else have we got here? Like Genius, I already mentioned, and a few others as well that kind of weigh everything out. So this isn't my entire P&L, by the way. Like if I fully exited from a position, whether that's a profit or a loss, it won't show on here. So this is just my active positions and then the total profit and loss, and that's the method for that. Yeah, and in fairness, when I look at this portfolio, 25 listed here. To me, 20 of them are like medium to long-term holds. The other 5 are kind of trading opportunities. I would count, for example, Genius Sports is a really good example of a trading opportunity. I've made some really good money on that over the time, and I would happily buy it again. I think it's kind of got a decent amount going for it, but I can never really imagine it being part of my portfolio in 3-5 years time. For me, it's like a trading opportunity and etc. So we'll build from there. But I think a lot of my larger holdings, even if National Express does come good and suddenly I'm sitting on a 50% profit, I would trim that, right? It's not going to be a forever hold at that kind of level, certainly, and I would be doing some profit taking. But similar to Huntsman here, that's now 12,000, which is what, like 12% or so of my portfolio. I'm definitely not in any more rush to sell Huntsman. Again, they had an earnings call actually on Friday, which I went on. It was solid. I enjoyed it. They also won a big case against Albemarle for like $400 million is their suspected net win. So yeah, I think again, like this is a good long-term holding. So I guess that's everything. So like I say, October not without challenges, but a 2.7k win, it never feels bad. Huntsman as well continues to do great for me. I made some big moves actually. It was quite a big trading month. Tens of thousands of pounds in new stocks were bought and indeed sold. But I'm increasingly happy with my portfolio, albeit, to be fair, that there are some improvements that I'd make in terms of growing my tech slice and filling in some of the gaps I have as well, which I'm looking to get to over the next, sort of 3 months, I suppose, you'll start seeing that come through. Any questions, again, I try and be as transparent as possible, so feel free in the comments. Otherwise, feel free likewise to comment, like, and subscribe. Otherwise, I've been the Boss Hog. Thank you very much for watching, and good luck with your investing. Bye for now.